Alhamdulillah, Alhamdulillah, Alhamdulillah. Indeed, all praise is due to Allah subhanahu wa ta'ala. We praise Him and seek His help and forgiveness. We seek refuge in Allah from our soul's evil and our wrongdoings. He whom Allah subhanahu wa ta'ala guides, no one can misguide. And he whom He misguides, no one can guide. I bear witness that there is no God except Allah subhanahu wa ta'ala alone without any partners. And I bear witness that Muhammad sallallahu alayhi wa sallam is His abd and final messenger. We want to send durood upon our Nabi sallallahu alayhi wa sallam. Allahumma salli ala Muhammadin wa ala ali Muhammad kama sallaita ala Ibrahim wa ala ali Ibrahim innaka hamidun majid. Allahumma barik ala Muhammadin wa ala ali Muhammad kama barakta ala Ibrahim wa ala ali Ibrahim innaka hamidun majid. Assalamu alaikum wa rahmatullahi wa barakatuh. I welcome you all to ALMPG's webinar on careers in accounting. Inshallah, before we start, we just want to pause a little bit and give thanks to Allah subhanahu wa ta'ala for giving us this opportunity to gather together, and alhamdulillah, to learn something new. Inshallah, let's move on. Just a brief introduction about myself. I am Dawood Ahmed, your host. I'll be hosting today. Inshallah, I am a part of ALMPG team, inshallah. So just a heads up. Okay, so introduction, why, and for this, for who is this webinar for, right? A lot of people on majority of the time on ALMPG, whatever webinars we have done so far are mostly related to IT or RF or some other field, but this is very first time that alhamdulillah we have a volunteer brother who came forward and kind of tried to give back to the community. So alhamdulillah, we are now doing a webinar on accounting to learn more about careers in accounting, what are the trends in accounting. And this webinar is for freshers and somebody who wants to switch fields from one field to if they are looking for a career in accounting. So inshallah they can join this, make use of this webinar, inshallah ta'ala. Okay, moving on. Webinar format is pretty simple. It's going to be 1.5 hour, 1.5 hour webinar, and it's gonna, inshallah, if the speaker wants a break, we can take a break of 5 or 10 minutes in the middle of the session, anytime whenever the speaker decides, and then at the end of the session we will take Q&A. Please, if you have any questions, don't worry about it. If you have any questions, you can also put it in the chat box while the session is going on, and at the end of the session we can answer those questions. Okay, let's move on, and let's do the agenda for today. Today's agenda is what does the accounting function do in a business, and then careers in accounting. We will learn about those, and then we will also learn about recent trends in accounting, use of robotics, how robotics is used in accounting, and then finally we will take the question and answers. Inshallah, now I'm not going to wait anymore. Inshallah, I'll introduce the speaker. Inshallah, I'm going to pass the ball to Brother Atif and then kind of unmute him, and inshallah, he can take it from there. So Brother Atif, I'm going to unmute you and pass you the ball. We are locked in and loaded, so you are ready to fire, inshallah. Fire the word of knowledge, inshallah. I'm going to pass you the ball, make you the presenter in a minute. Okay. Brother Atif, see if you can talk and hear you. Me. Okay, hold on. Now I think I have to unmute you. Oh, yeah. Okay, go ahead.
Assalamu alaikum wa rahmatullahi wa barakatuh. Can you guys hear me okay?
Yes, we can hear you fine, alhamdulillah.
And you can see my screen?
Yes, we can also see your screen, yes.
Jazakallah khair. Thank you so much, brother. Welcome to this What is Accounting Career webinar. My name is Atif Mahmood. I am the Chief Financial Officer for AIG Investments. I'll give a little more background about myself, and then I kind of get to this webinar. I basically went to Brookes College here in New York. I'm based in New York. Got my BBA, which is Bachelor's in Accounting. Went on and did my CPA license in the New York State and passed that license exams, and then joined various companies, and then ended up at AIG as a financial analyst, and over 14 years of my career sitting as the Chief Financial Officer of the company, basically on the investments division. A little bit more what investment division is. If you don't know what AIG is, it's the American International Group. We're the largest insurance company in the world. I don't sit on the insurance company side. I sit on the investment side, where we take the premium that comes in from the insurance companies and we invest them all over the world. We manage about $350 billion worth of investments, and we generate about $13 billion of income to AIG on an annual basis. And I handle the accounting department on the investment side of the business. We wanted to bring you this webinar because I kind of reached out to Brother Dawood and went through what this organization is about and wanted to kind of join the organization and provide whatever information or whatever help I could provide to this organization. And I realized that a lot of the stuff was just based clearly on IT stuff and nothing more than IT. And I was like, well, I'm not IT. I'm an accountant. Maybe we should have something on accounting and give the community a little update of what is accounting, because it's the most essential part of any business, and it's required no matter where you go in the world. Just a brief definition of an accounting to kind of get people to know exactly what we're talking about. It's basically a process of taking, classifying, summarizing, analyzing, and presenting the financial transactions and record them in statements, profitability, financial position of a business or entity. Expert in accounting are known as accountants. And there's different types of accounting. And before I get into the different types of accounting, I want to kind of tell you that all over the world, there's only 2 accepted principles in accounting. You may hear these words in different presentations or different publications. One is called GAAP, which is the General Accepted Accounting Principles. That is used all over the United States. It's what's governed by the SEC and governed by something called the FASB, which decides the rules in accounting and how rules should be implemented across the board. And the rest of the world uses something called IFRS. It's the international standard. It's used all over Europe, all over Asia, Australia, and the rest of the world is basically there. And then there's one small thing in Japan, which they call Japanese GAAP, but again, every one of these things are 99%, or I would say 95% the same in terms of the rules. There's 5% differences of how certain things are treated in the United States versus IFRS versus, they call it the JGAAP, which is the Japan GAAP. Those are the background of how things are governed in accounting. The SEC oversees all imposing of the rules that are set by the FASB, and the SEC makes sure that all these large companies that are public, especially if you think about the stock exchange, every one of them are required to file their accounting records on a quarterly basis with the SEC, and they have to be audited by one of the big firms that I can kind of go into as we go into details of what type of accounting that exists. I'll give you a general background of different types of accounting, and then I can get into the different careers that can be done in accounting, and then how robotics are changing this field as we move to the future. I'll probably take up 45 minutes of your time, and then kind of open it up for Q&A as part of that process to kind of give you guys enough time to cover any questions that you may have for me in this related field. So different types of accounting. We have it, if you can see my screen, we start with cost accounting. Where is cost accounting usually used? So cost accounting is a lot of it is just going to be in manufacturing businesses. What does that mean? It basically means that everything, when you have a factory and it goes through an assembly line, every little thing is tagged in the accounting process. So if you take 50 things to make a robot, or you take, thousands of millions of things to make an airplane as an example, every one of those little parts and pieces down to the screws are part of the cost accounting and part of tracked as part of the process. And why is cost accounting only used in manufacturing? It's because it allows you to kind of figure out what is your fixed cost and what is your variable cost. When I say what's a fixed cost, it means what cannot be changed no matter how many things you produce. And a variable cost is it goes up and down depending on the number of products that you produce. So those are the main characteristic of cost accounting, and it has its own little quirks of how it gets used. But across the Midwest, where there's a lot of manufacturing plants and things like that, that's where a lot of this is used across the board. There's a brief definition here, but again, just to give you a plain explanation of what these are, is basically a manufacturing process. Then you have management accounting. Management accounting really is anything management wants. So this is called, something that the management doesn't have to follow GAAP, or doesn't have to follow IFRS, it doesn't have to follow JGAAP. It can look to view things the way it wants to view things. And this is basically not given to anybody else. This is basically kept within the company, and it's not distributed outside of the company, because it's the view of how management wants to see its financials and how management wants to actually look at different things to make different decisions. So, like, for example, I could give you is under GAAP, there's very specific rules what can be included in revenue and what can be included in expenses. In management accounting, the CEO may want to see this type of revenue and not this type of revenue or this type of expense netted in revenue. So he may want to see things that are netted rather than things that should be grossed up as part of the GAAP standards. Those are, and the management accounting is also, to make it a little more clear, think of it as, forecasting and budgeting. When you budget something and you do forecasting, it's really how management wants to see the company and how management wants to run the company. And that's the process that kind of gets done from that perspective. As you get into financial accounting is basically used to go through how things are reported across the board and how things are done in different various organizations, and things are happening from the process of how we present these numbers to the street and how we present these numbers to investors. So financial accounting would be how we, when you go to the bank wants to see your financial statements. When you go to somebody to get a loan, they want to see what kind of balance sheet or income statement you have. That's all focused on what the financial accounting is done. And then anything that you have in terms of public companies, you can go online and look at their they call it 10Q for the quarterly reporting and 10K for the year-end reporting. And you can see what kind of financial information they have and disclosures they have. That is what's called financial accounting. So the main distinction between management accounting and financial accounting would be financial accounting are for the people outside of the company. Management accounting is for anything that the way the inside management wants to see its financials. Those are the main differences between the two. Then you get into auditing, and then auditing is very interesting. There's, you probably heard there's 4 largest accounting firms out there. It's PwC, KPMG, Ernst & Young, and Deloitte & Touche. Those are the main 4 companies used all over the world. And the audit, again, have its own standards of how they need to perform their audits and kind of so in the plain simple words, an auditing is an independent person that comes in from the outside of the company and gives an opinion that you have done everything possible to follow the right guidance that has been put together as part of the GAAP results or the IFRS results in different parts of the world. So you're coming in as a third-party person, as an unbiased opinion, and you're giving basically you're given an opinion on the financial statements, and you express your opinion based on whatever work that you have done to make sure you get comfortable with that opinion. And there's a lot of work that goes into auditing, because you're basically an independent person that needs to understand how a company puts together its financial statements, and then you can verify all the material numbers as part of that process to see those things are done in the right manner, they're stated in the right manner, and appropriately recorded in the right manner before anything is released to the public. And this is something that a lot of people rely on, especially investors, because basically management can do whatever it wants with its financial reporting. You can add revenue, you can subtract expenses, you can do whatever you want because you control your financials. But when you get an unbiased opinion from a third-party independent person, that is putting its own opinion on the line, effectively you have much more comfort that what's done in those financial statements is accurate, and that's what's used in the market to go and basically a bank to allow you, give you a loan on those financials, or the stock market to kind of say, okay, yes, we understand where these numbers are coming from, and we believe these numbers because somebody on the outside has gone in and looked at these numbers and expressed an opinion on those numbers. And there's been a lot of there's been a lot of cases in the financial crisis, and you may have heard of Enron, you may have heard of other big companies that were, I would say, doing things that the auditors did not catch, and eventually ended up going bankrupt and different things. But again, we can in Q&A, if you want to get into that detail, I can kind of get into details a while. Sorry, I know some of these companies got away with some of these things and weren't caught by the auditing standards. Then you get into this thing called tax accounting. What is tax accounting? So, there's a whole tax code out there that you guys probably know about that keeps changing, and as the new administration has come in, it actually changes again. There's, usually a separate department across the board that kind of goes and tries to figure out what's happening from the tax perspective of financial statements, because in order for you to complete your income statement, you have to have a tax accrual. You need to have what's currently payable and what is something called deferred. What is a deferred? Under the tax rules, you can pay or receive a benefit in future years depending on a transaction that took place today. And those are recorded as deferreds. If a tax is due on a transaction in the immediate year, and that is considered a current. So the main thing, if you see on a financial statement, you'll see a current and a deferred line in taxes. And the main difference is a current is due in under a year, and a deferred is something that could be due, or it could be either one, a refund or a payment in over a year or in the future years, depending on different criteria across the board. That's the type of accounting that exists out there. And I just want to kind of give you, basic flavor of what it is. We get into, why is accounting important for a business? Now, accounting is the most important piece of the business because it's a way for them to document what's happening in their financial activities. Businesses need the accounting to report their income on taxes, keep track of their fund flow, make sure they have enough money in the account. It provides information in terms of insight into how the operations are running, whether the trends show, are there any opportunities to cause the company make profit. It gives the tax reporting agencies to kind of say, okay, there's, and then, under the tax laws and the tax agencies, they require you to keep books for a minimum number of years because the IRS can open up your tax returns for multiple years, and you need to keep these records in order for you to kind of move those things forward. Now, many of the large companies have accounting in-house, but there are people that also outsource their accounting. So businesses can do both. They can do it in-house, they can do outsource, and I've seen a lot of businesses actually do a mix. And why would some companies do a mix? Because they may outsource to a cheaper location. And this is happening all across the world, and it's basically happening a lot in these big states, especially New York, California, Texas, where people are, and the workforce is expensive. They want to be able to kind of use offshore companies like in India and Philippines, Manila. We've seen companies set up in Colombia. We've seen companies set up in Eastern Europe countries.
Yeah, that was not.
Sorry. In Eastern Europe companies that effectively people have been outsourcing to. So what does that mean? That means that people have a accounting department here in the United States, and then part of that team is sitting in a remote outside of the country where they do a certain amount of work for them. So a lot of the companies today have moved a lot of the centers to India. The two main cities in India where the centers are being allocated today is Gurgaon and Bengaluru. There are Google, you can name it, Google, Microsoft, AIG, all the top, I would say, top 30, top 40 firms have their centers in India today. Either there's all the big credit card companies have call centers there, all these other companies have different processing there. And it makes sense, and I'll give you the reason why some of it makes sense. There's a lot of workforce there. A lot of people are educated in that society. There's a lot of people that are looking for work, and it's pretty cheap for the companies to kind of set something up. An average accountant cost to set somebody up in India is about $30,000 a year, and an average accountant here effectively costs you about $70,000 to $80,000 a year plus overhead plus everything else that you have to go through. So I'm basically, that's the reason why some people do it in-house or outside, or somebody do both. And majority of the new companies, the majority of the future is a mix where part of it is in-house, part of it is outsourced, and that's effectively how they've been running this system across the board. Some of the small companies, like small stores, if you can think about it, like, you look at all these mom and pop shops, you look at some of these controls, they don't have accounting. They can't hire somebody to do accounting, and they basically outsource their bookkeeping to different small accounting firms that kind of charge you an annual fee to do your books, because you got to file sales tax, you got to file tax returns, you got to file payroll. All of that comes into play as part of that process, and then that's why it makes sense for the small companies to outsource, because it's cheaper rather than having a full-fledged accounting department within a specific company. So those are what happens across the board. Getting into careers in accounting. Now, many people have a bias that accounting is just, hey, you do debits and credits as one person and that's all they do, and that's the rest of their life. It's the same thing. That's completely not true. There are many, many, many fields within accounting where people become specialized, or where people become accustomed to, that has many career perspectives, and they pay very well in terms of a lot of these careers, and some of these guys make a lot of money as part of that process. I'll go briefly into some of these things so you guys have at least have a flavor. I kind of try to cover the majority of them. There may be some one or two that I haven't covered here, but like this will give you the 99% of what the careers are in accounting and what each one of these things mean. The first one is controllership. What does the controllership of a company does? It writes reports, it conducts analysis of corporate funds, and it has a final word on approving expenditures. Controller has the primary responsibility of managing the costs and finances of an organization. So controllership would encompass like accounts receivable, accounts payable, expense controls, paying off vendors, tracking cash, doing cash flow analysis. The basic accounting would be part of the controllership. And the other piece of the controllership is going to be effectively doing reporting. They do financial statements. They do reporting to the street. They do reporting internally. They produce the financial statements that you see outside in the financial filings that go with the SEC and all of the public companies that exist out there. So they have a very they basically are the main engine that drives the rest of the accounting, and they are basically responsible for all the financial reporting of a company as part of that process. Again, even within controllership, you have different careers that can be taken. Like somebody wants to be an accounts payable person, somebody wants to be in reconciliations, somebody wants to be account receivable, somebody wants to be just in reporting, somebody just wants to be in consolidation. So there could be many different things even within some of these high-level careers that we mentioned here. And then, if we can dig deeper into different specific one of these in a later webinar if we need to, if there's interest in that. But this kind of gives you a holistic view of what's happening across the board. Then you get into this thing called financial planning and analysis. Now, financial planning and analysis is very important to every business because it does two or three things that's essential to the business. First, they're responsible for all the budgeting, forecasting, and analytical process that supports an organization, right? They help set up the business strategy. They help build what the budget's going to look like. They help build how we forecast our revenue or our expenses across the organization. And then they're the one also driving any strategy. If we want to expand, we want to contrast, we want to buy something, sell something, they're basically making projections and doing things to give management the power and the knowledge to make a decision. So they're very important to this process. Again, they use the data from the controllership, but then they do the projections and future projections. So think of controllership as what's happening today in the business, meaning the current financial statement and current financial position, and think of FP&A as what's going to happen in predicting the future and kind of doing analytics across the board to kind of say, why did something move? Why did something increase? Or why did something decrease? And kind of go through that process across in an organization. They also have a discipline in in-depth analysis of both operations and financial data. They help do processing and strategies for the business. They help set financial goals. They rely heavily on statistical analysis to measure and plan business operations and forecasting. They take into account internal variables, but also they look at the demographics and economic trends. So example would be like investments. You have to look at what's happening in the economy to be able to predict what's going to happen in the future. Did the S&P 500 go up? Did the stock market crash? Did the stock market, increase? Did the curves that they measured against went up or went down? Did the Federal Reserve raise interest rates, or did the Federal Reserve lower interest rates? All of those have an impact on how an investment world comes into play. So look at all of the banking, look at all of the large investment managers. They rely heavily on what's happening in the economy in order for them to make their predictions and their budgeting and their forecasting, because they need to understand effectively how something in the market can either impact their businesses significantly or not impact their business significantly, and they plan accordingly depending on what they predict these economic trends to be. I mean, if you don't have this key function within yourself, then you're not really looking at in the future years of how you want to do in your business. You basically are blinded by whatever happens in the markets, and you can't even predict how that's going to impact your business. This is a very important piece of an organization, and it's basically, called, you can put management reporting in this thing, but it's basically the backbone of how most of these organizations function. Then you get into something called accounting policy. Now, this is a part of the company that a lot of large organizations have, and not many people are worse in this. So what if someone in accounting policy does? So as I told you before, there's GAAP, there's IFRS, there's JGAAP. They issue standards every single year. They issue changes to old standards. They revise standards. They do new standards based on what's happening in the market. You need some people to understand what those policies and procedures and those principles mean and how they're going to impact the company. These people, they're usually called the Office of Accounting Policy, are people who are well-versed in these policies, and they study these policies and then apply them to the rules of the company and say, okay, if FASB comes out today and says we want to change the way you recognize revenue, how is that going to impact the company, right? If FASB comes in and says, hey, I'm not going to give you deductions for X, Y, and Z, how does that impact a company? So these are like the experts who understand what's happening across the policy world, and they give you a breakdown of how what's happening in these policies is going to impact the company. So again, they have a very important role to play in the organization, and a lot of these people are basically specifically tied to just the policy piece of it. They basically tell you how a policy is administered, how it's applied to a company, and then they hand it off to the controllers to go get it implemented. So they're an essential part as well. Then the next one is internal audit. Now, what is an internal audit? I know we talked about auditors before, but there's two things in terms of an audit. There's an internal audit, and then there's an external audit. Internal audit are people that are within the organization, and they examine how the company is running from the inside. So there's something, I don't know if you heard of this, but there's something called SOX controls, or you heard of that there was Dodd-Frank that was issued when the financial crisis went down. So what is Dodd-Frank? Dodd-Frank basically put a lot of rules around what needs to be tested within the company and how those controls need to be functioning. So what the internal audit team does is it defines what are your key controls within your organization and how those key controls affect what happens in your business, and are you following those key controls or you're not following those key controls. And they measure that and make sure that if we're not following our key controls, how do we remediate that and make sure we follow our key controls. Then you get to, they basically are auditors, but they are internal to the company, and they want to make sure that whatever's happening in the company, they can assess and they can provide information on. What's an external auditor? This is what I addressed before. These are the outside firms. These are the firms that don't work for the company in terms of directly working for the company, but they look at and provide opinions on the company to kind of say, yes, I've looked at your financial results, I've looked at your information, I've seen what's going on in the company, and I can issue an opinion or not issue an opinion. And those opinions are very much required by certain banks, by the SEC, by any public company. Must have an audit. So if you're a public company and you're listed on the stock exchange, you have to have an audit, and you have to have some external auditor come in and issue you an opinion on what's happening in your financial results. So that's, again, very much needed. So if you think about it, a lot of these big four companies that I talked about hire a lot of college students because they need them. They need them to do the testing. They need them to do the different worlds. So, 90% of these college students that come out go to these big four because it gives them a foundation of how to go and be able to look at things in accounting and kind of grow from there. Look, some people, majority what happens with these external auditors is they hire college students, they kind of stick around for 3 years and 4 years, they get a lot of learning, they get lots of feedback, they get lots of experience of how to deal with different companies, and then they move on and they actually go work for the companies themselves. Now, remember, a same team of an auditor can work on 10 different companies. So they get a broad knowledge of what's happening across the world. And that's why it's so important to people a lot of people want to join these external auditors because it gives them foundations of how to move forward in their career as part of that process. And these guys are really, really good. They groom you, they mentor you, they give you all the tools that you need to kind of succeed. And if you're willing to stick around with them and you're willing to stay with them for 10 to 15, 20 years, they do make you partners. And if you become a partner of these audit firms, you basically get a piece of the profit that the company makes. So it's a very lucrative position, but again, it requires a lot of hard work. It requires a lot of late hours. It requires a lot of time commitment to be able to get to where you are. But once you do become a partner, it can't take that away from you. So again, it depends on what is your interest in terms of that process. And the next one is a very interesting one. It's called derivative accounting. Many of you may not know what a derivative is. It's, in plain, simple terms, and there really is no plain terms for derivative, is you're hedging your risk. Now, what does that mean? In a financial market, you may hold a security that's in GBP, or you may hold a security that is in Japan yen, JPY. But you're basically transacting in dollars because you're in the United States. You don't want to deal with the foreign currency risk of things going up or things going down. So these are some of the instruments that some people use to hedge those risks. Now, these are very, very complicated things where, you're not betting, you're basically hedging your risks in different areas. One risk is the FX risk. Another risk is interest rate risk. So there are companies out there that buy bonds that are floating rate, right, based on how the market moves. And you're basically leaving yourself out there to be, whatever happens in the market, you're going to be having that impact. So if the Fed raises rates, you're going to pay more. If the Fed lowers rates, you're going to pay less. So in order for you to get rid of that volatility or get rid of that exposure, a lot of the companies, they do something called a fixed to float, where they convert their floating risk into a fixed rate so they know exactly what they're going to pay every single month rather than being stuck to what the floating rate looks like. So a lot of these derivative accounting and these derivative transactions are there to hedge your exposure to different risks. Now, this is one of the things that actually caused a lot of the financial crisis as well in the back of 2008, where people were trying to hedge these mortgage risks and things, not knowing what was inside these mortgages. And as the mortgages started to default, these companies that had given this I would say guarantee of making them whole didn't have enough money to pay for all of the things they've written, and that's why they kind of started going bankrupt. So it's a very complicated thing. It also is very complicated to price, because it's not like you have a derivative and you're done. Your derivative is out there where you have to price this derivative by these independent pricing places, or how the market kind of reacts with interest rates and stuff like that. So again, it's a very specific accounting, but it's a very interesting and a complicated accounting. And there's a lot of individuals right now that are interested in this, because it is something that's different. It's not just you're sitting there doing debits and credits. You're thinking of what risks that exist in your financials that you can kind of play with or kind of hedge. So if something drastic happens in the market, it doesn't impact your business. So again, very interesting, very complicated. But it is something that you specialize in, and the FASB and the SEC have very strict rules around how you can do these things and where these things get recorded on the financial statements. The next thing is called Global Capital Markets Accounting. I didn't go into any different specifics there, but the goal with capital markets accounting is basically doing accounting for short-term investments and things like that, where this is a division that would record the derivatives. So there's a front office that actually executes the derivative trades. And then this global capital market accounting team usually record these derivatives on the financial statements and monitors them and look at the volatility of them. And they also look at some of these FX risk and short-term investment risks and kind of monitor those to kind of say, how does those come into play and where those gets recorded in the financial statement. So that's what they're specialized in. Then you get into the shared services and offshore locations. This is what I talked about before, where a lot of companies are using offshore locations to do their accounting. And effectively, that is what's happening here across the board, where things are being sent to India or sent to other places in the world to kind of offload costs effectively across the board. So I won't get into more detail on that because we kind of went through it before. Fund accounting is an interesting one. Because fund accounting, you guys, the majority of you may have heard of hedge funds and private equity funds and those kind of funds. Those are where this fund accounting comes into place. They're basically accounting for private equity funds and hedge funds. What are private equity funds and hedge funds? Basically, these are investment vehicles that go out and invest in different private companies to generate a profit, and they don't generally hold a company or an investment more than 4 to 5 years. So they kind of look to kind of find a distressed company, go and buy that distressed company, make it work in the next 4 or 5 years, fix it up, and then sell it for a quick profit. They're not there to hold something. They're there to just go in and make a quick profit for people. So there's a huge world out there for hedge funds and private equity funds, and these fund accountants are responsible for doing the accounting of those funds and valuing those investments and things like that. So very, very interesting business, very competitive business, pay you very well as well, as they make a ton of money in those asset classes. So very, very, again, interesting, and if you have specific questions, I can kind of help answer that as well. Then we get into tax accounting. Again, we talked about you need a tax team. You need a tax team to do tax accounting in order for you to kind of go out and figure out what your tax liabilities are. So these guys govern all of your payables, receivables, and your from income tax perspective. A lot of the U.S. companies have foreign operations. They need to look at what the foreign tax consequences are and things like that. So these are specialized only in tax, and they basically are responsible for tax law across the United States and across the different firms and how those impact the financial statements and how those things get recorded. So it's the federal taxes, state taxes, local taxes. They cover all sorts of different taxes across the board. The next one is called acquisition accounting. And another word for this is some places that use it's called purchase accounting. what is there? This is basically M&A when you have mergers and acquisitions. When one company buys another company, you need to figure out how to record the other company within your financials. And it's not easy because you have to price their assets, price their liabilities, see if you paid more, or see if you paid less than what they're worth, which is called goodwill. So a lot of this is very technical, very complicated. It's where you acquire a company, or you sell a company, or within your own world, you put two companies together, or you dissolve one company, or you merge one company. These people are basically trying to figure out how to merge those two things together based on the rules and the laws that are out in the market. Financial accounting, I think we discussed, that's almost same as, it's part of controllership, but it's really just actually producing the financial statements. So they produce the income statement, the balance sheet, the cash flow statement, the equity statement. They're basically are responsible for the actual production of the statements. The public accounting we talked about, that's basically the external auditor that kind of goes out there and kind of performs different jobs for different companies. And again, it's very lucrative, and it's very a lot of the young people coming out of college, that is their preference, because they get to know and understand a lot more different variety, and kind of makes them gives them the very good base to kind of go into different specific companies across the board. One thing I didn't address here is something called a broker-dealer accounting. What is a broker-dealer? A broker-dealer is a specific companies that are set up in the market to transact trades. So if you want to buy and sell shares, you want to buy and sell different transactions, you need a broker-dealer. A broker-dealer is set up under the different rules, which is governed by something called FINRA. They govern how broker-dealer accounting gets done and how those things are recorded. And they have specific rules, they have specific laws that they need to measure their capital and things on a routine basis to make sure they don't go over their capital, go under their capital, and all that stuff is measured. And then if they do, there are large fines that are associated to these companies. So it's a very, very serious process. And they look through that as part of their ongoing, management of these trades that are out there. So that's a very interesting piece of the world, is broker-dealer accounting as well. Recent trends in accounting, we use robotics. Brother Dawood, I want to stop here for 2 minutes and kind of give people maybe a chance to ask questions before I get into robotics. Is that okay? Brother Dawood, are you out there? Can you unmute?
Hello? Yes,
Hi,
I am here. So I was speaking on mute. Go ahead.
Can we unmute just to get people a chance to ask questions before I get into robotics?
Okay. You know what? Let's see. I am going to put this on Q&A session. And if anybody has any question, please go ahead and join to the Q. Okay. Go ahead. If anybody wants to join in, ask any questions. Okay. Go ahead, join the Q&A session. Brother Sami has a question if you want to ask before we proceed to the recent trend in robotics using accounting. If you want to ask any question or put it in the chat box, go ahead, do it. Okay. You know what, Brother Atif, maybe we can take all the questions at the end. We are almost there, right? Oh, hold on. I have to unmute you. Sorry. Okay. Okay, yes. He has a question. Is premium brokerage is same as derivative accounting? Can you answer that, Brother Atif? I have unmuted you. Go ahead. Oh, hold on. Okay,
Thank
now
you. Thanks a lot. Prime brokerage is not same as derivative accounting. Prime brokerage are companies that actually transact stocks for you, right, or mutual funds for you. So a prime brokerage is somebody like TD Ameritrade, somebody like E-Trade, somebody like Fidelity. Vanguard. These are the large companies that are out there that are called prime brokerages. What do? They basically help you trade stocks. They help you manage your 401k, help you manage your retirement, and help you manage your different pension plans and things like that. They may deal in derivatives, but they're not part of derivative accounting to say. So continuing on with these recent trends in accounting in terms of robotics, a lot of the things have been moving forward in terms of how robots have been used in many different processes of accounting. So, a quick example would be, payroll. So before, you used to do payroll and somebody would, process something, give you certain reports, and you would manually go in and you would record payroll by cost centers or whatever to make sure you have enough detail to provide to management. Now you get direct feeds directly coming into your ledgers from a payroll system that can just record information without anybody actually touching it. What's robotics basically are doing, and then where we're heading in terms of trends, is it's eliminating the day-to-day management or day-to-day recording of transaction and kind of leaves more emphasis on analysis than the emphasis on recording. So the path in the industry has been, anything as a manual task, like bank reconciliations. Why do we need somebody to kind of look at what's in the ledger, look at what is in the bank account, try to see if it matches, and certify it? Well, now you have these softwares out there where it takes a ledger, it takes a feed from the banking source, matches up things and say, yes, your number from your ledger equals to the number from the bank. We're done. Nobody touches it. Nobody gets involved in it. It basically does it on an automatic basis. So they've also, another example would be in tax. In large companies, when you have billions and billions of investments, you get a lot of K-1 issued by companies that come to you as part of your annual process to file your tax returns. They have basically designed robots to take these K-1s that come in, they scan them, and they upload this information in a software that allows people to get a total and be able to do their tax returns without having to go through individual K-1s as part of that process. There's robotics being used in terms of they can actually track what you do, meaning if you're sitting there and every single day you punch in 7 or 10 different things that you do, a robot can now learn the 7 or 10 different things based on the keys that you touch and can replicate that across the board. And the benefit that they have, you just think about this, the robot is going to work 24 hours, 7 days a week. The robot's not going to take vacation. The robot is going to cost you $10,000 to $15,000 a year, depending on the robot that you choose. And there's no overhead. There's no health insurance. There's no pension. Just think about what is happening where these robots are cost effective for these large companies because they don't have to have any overhead. There's nobody getting sick. There's nobody taking a vacation. There's nobody having downtime. These things are running 24/7, 365 days a year. It's a great thing, but you can't put everything into robots. You can't do everything there. So, I know that, they've kind of come up with where they can automate some of these things, but effectively you still need somebody to kind of take that process and analyze it and present financial statements and present trends and things like that. But yeah, a robot can predict trends. It can take your last 10 years of data and say, okay, over the 10 years, this is how you've been trending. And then you have a lot less people, you need an FP&A. A robot can take things and record all the accruals that you need to record at the end of the year for whatever things you need to record. That gets rid of the lower level accounts that are there. So, the trend is what's happening in every industry. It's not just an accounting industry. The robots have been taking over in multiple industries, and it's basically eliminating the low-level work that you had before, and it's placing the emphasis on the work of just what the financial reporting team would do, or what the analytics are, or the reporting is, and eliminating kind of jobs across the board. And if you really think about it, this would hurt a lot to the offshoring teams, because the majority of the offshoring work is just manual, daily, repetitive work that if a robot can do, You're not going to need centers in India. You're not going to need centers in anywhere else because these things can do it for you. Like, I mean, you got robots now answering your phone calls. Why do you need a call center in India? So this is a trend that the industry and everybody else is kind of moving forward. It's called machine learning. It's called artificial intelligence. There's different names for it. But it has a lot of different, it's going to touch a lot of different industries, and it's going to touch a lot of different places as this thing kind of takes off and kind of moves things forward. I like to stop here. I know I went through a lot and kind of took up almost an hour of your time, but I hope I gave you a overview, and I didn't want to get into a lot of details because every one of these topics you can talk an hour on and more on, but it kind of gives you an overview of what an accounting career looks like, what kind of things happening in accounting, where people can come in and how people can be part of this workforce. And remember, any business out there needs accounting. You can't function without accounting, especially these public companies cannot even do anything without accounting. So it's a stable position, a stable job that's always going to have some demand out in the market because it's needed across many different functions of an organization. Thank you, and I think that now I'd like to open up Q&A. If you guys have any specific questions, I'm happy to address them.
Jazakallah khair. All right, let's take some questions. Please, we have the session is in Q&A mode. If you have any question and answer, please join this queue. You will see a button at your end to join the Q&A session. Brother Sami? Okay, let me see if I can unmute you from my end. Have you joined through a number or your computer for the audio so that I can unmute you? Okay, you have joined the queue. Okay, I have unmuted you. Go ahead, ask your question, please.
Hi, brother. First of all, thanks a lot for arranging this session. I'm really happy to see this through ALMPG. I really congratulate the organizers for organizing this. And to quickly introduce myself, I've been into the fund accounting for the past 8 years. So I really am glad to be a part of this. So my direct question to Brother Atif is, when we're talking about robotics and automation, so I just like to, I'm always curious like how it's going to hit the fund accounting industry as such in the coming years.
Did you say fund accounting or just or any financial accounting? Brother Sami? Can you hear me?
I think he dropped off. No problem. I think he mentioned front accounting. I was not clear though.
Yeah, if it's fund accounting, it's different. If it's financial accounting, is different. I think fund accounting, again, you can use robotics in different areas of fund accounting to do projections and things, because a lot of these fund accounting is basically looking at companies, analyzing their financial statements to kind of say, can we go in, fix this company and do a quick fix to make money and walk out. So there's different things robotics can be used in that process. But I would like to get more specific if he was able to kind of give me some background on what he wanted to ask.
Brother Sami, you are unmuted. If you have question, please, you can talk.
I was just, can you hear me?
Yes,
yes,
I can hear you.
Yeah.
Go ahead.
Yeah, I don't know. I just got disconnected. My question was related to automation. I just like to understand, like when we are talking about automation in almost all the fields in the accounting field also, I just like to understand and know like how it's going to affect the fund accounting department as such, or fund accounting sector as such.
Sure, I thought that's what you asked. So from the fund accounting perspective, as you realize, what happens there is you have 4 or 5 different things that you record as a fund accountant. You record the valuation of your investments that are in a hedge fund or a private equity fund. You record what you have to pay in terms of any management fees across the board. You record what audit fees and what other expenses a fund has to pay as part of its process. if you think about it, a lot of the things in fund accounting is repetitive. Apart from valuations, there's a set rules of how much management fees you pay. There's set rules of what vendors you pay and what audit you perform. A lot of the robots can effectively record that as part of that process in your financial statement. The only difficult part in a fund accounting is always going to be valuations of investment, which doesn't happen in a robotic sense. But the companies that provide valuation can use robotics to do projections, predictions, and things like that to come up with valuations that they use in fund accounting.
Brother Atif, tell me this, does that going to affect the manual jobs which people are doing, these automation?
Absolutely. I think as we move forward in these things, it's going to affect manual jobs, and I think it's going to affect the people at the lower level because you don't need somebody sitting there getting a statement and punching it into a system. They can have a robot do that. They can have automation of having somebody linking the system directly into their ledgers, and this is why I said I think the biggest impact is going to be shared services, which is like India and stuff, because we usually send work in shared services that are basically generic work that's repeatable, that happens the same all the time. And that work, you can do it very cheaply with these robots and have an efficiency of 100% because there's no downtime.
Right. And tell me this, so if this is the scenario, then how can somebody be up to date or kind of, be with the pace, right? Or how to upgrade their skills if they are into these manual jobs? What do you suggest?
I think you have to focus more on the value add work, right? Which is analytics, which is work of how to look at data and be able to understand what that data means and be able to provide management the commentary. Remember, a robot is a computer. It can only do things that are simple tasks. Right now it doesn't have artificial intelligence to kind of go in and say, well, if I made $10 yesterday, I made $10 today and $10 tomorrow, I'm going to continue to make $10. That robot can't really articulate that. It can put the data together for you, but you still have to have people that need to be able to explain that data to management, be able to do budgeting and forecasting, be able to explain the results to management. So, a lot of the jobs are going to be going forward towards more of how you can be a value add in explaining the results of a company rather than making those results come together in a ledger system.
Right, Jazakallah khair. Brother Sami, does that answer your question?
Yeah, it does. One more quick question.
Yeah.
Sure.
Yeah, is there any technology we need to keep learning in order to be with the pace as per the industry going towards automation? Do we need to learn any technology to learn something, or what do you suggest basically in order to survive in this market of automation?
I think, listen, the automation is going to affect many different places. I think what people need to do is broaden their experiences and broaden their horizons. Like, there's a lot of specialized things that I went through, like accounting policy, like derivative accounting, like some of these other fields that need people to do technical work that a robot can't do, right? Those are the things that people need to, they need to not just be stuck in one field and be stuck in that field, because eventually if you stay in one field, you have a lot more chance of being replaced. Well, you have a lot more rounded experiences. And I mean, I would look on a general basis. What I would recommend to you guys is, if you're in an accounting field, you should be learning something new every 2 to 3 years to keep yourself interested and motivated.
Yes, Jazakallah khair. Well, that also counts in any other field. We have to keep up with the pace with the growing technology. I think even in IT, if we kind of stay with one single tool, we are gone in 2 years. So
yep.
Myself, in IT, we have to keep learning and upgrading our skills, and that goes in all the different fields, whether it is accounting, business, or IT. So, Jazakallah khair.
No problem.
Any other question? I think Brother Sami, does that answer all your questions? Okay, I think he's out. Okay. So, any other questions, brother? And sisters, please feel free to, if you don't want to join the call, please put it in the chat box. We can take your question from there as well. Anyone else? Questions? Okay. Brother Atif, I don't think we have any more questions. Do you want to add something at the end of this, the whole session?
Look, I think, thank you for giving me the opportunity to kind of go through this. I think if you have any specific questions that you want to ask, I can give you, you can use my email address, or you can get it from Brother Dawood and be able to ask me questions, whatever you need. If I can help in any way whatsoever, please do let me know, and I'll be able to provide whatever information that you guys need. But again, I want to be able, use me as a source rather than just somebody coming in, be a presenter, and kind of move on.
Yes, alhamdulillah. Okay, so Q&A is ended. So alhamdulillah, one of the brother he mentioned. Okay, brother Ilyas, yes. Jazakallah khair. Yes, I think brother Atif, overall this session was very good. Alhamdulillah, we need to do a lot more session like this, because believe me, this is going to help a lot of brothers. Because alhamdulillah, on ALMPG we have a lot of volunteers for IT, but we have very few volunteers for different other fields. But inshallah, I encourage every brother, who is a community leader and who wants to give back to the community, please feel free to reach out to us. Inshallah, we can help you set up the session, and we can help a lot of people. And inshallah, this recording will be available on YouTube in a couple of hours. So don't worry about it. We have recorded this session if you have missed any part. And our last request, please make dua for the presenter, for Brother Atif. May Allah bless him and his family with the best in this world and the hereafter, inshallah ta'ala. And also, please don't forget to pray for ALMPG's team. We are trying our level best to, alhamdulillah, try to facilitate things for our community and kind of, make a mark out there that, we can together do a lot more things, inshallah. So with this note, inshallah, at the end, I want to say, please, if you haven't registered for ALMPG, please feel free to register. You can also reach out to us at moderator@almpg.com if you have any questions. Okay, so inshallah, this is your brother Dawood Ahmed. I want to end with the dua, so that we all go, and inshallah we all remember that we started this session with the name of Allah, and we want to end this session with the name of Allah. So inshallah ta'ala, jazakallah khair once again, brother Atif, for making this happen. You, alhamdulillah, you volunteered. I wish we have more brothers like you to come forward and help the community out. Jazakallah khair once again from the whole ALMPG team. So
thank you so much.
Everybody, assalamu alaikum. This is your brother Dawood Ahmed. We want to end with the dua. Subhana rabbika rabbil izzati amma yasifun, wassalamun ala al-mursaleen, walhamdulillahi rabbil alameen. Bismillahir rahmanir rahim. Wal asr innal insana lafi khusr illa alladhina amanu wa amilus salihati wa tawasaw bil haqqi wa tawasaw bis sabr. Jazakumullah khair. Assalamu alaikum wa rahmatullahi wa barakatuh.